Hey everybody, good afternoon. It is 3:14 Central Time here in Florida. Let's go ahead and go over the broad market analysis. I'll try to make this one a little bit shorter and not try to get into any opinions. Let's just look at the technicals. So the first thing that I want to talk about tonight is going to be the earnings and what's in store for earnings. And I simply use Twitter for this and use earning whispers, and I've been using them for many, many years. So thank you very much for that. This makes it really quick and easy. I can look at it from a calendar and I can see the stock symbols here, and I can just kind of zoom in here and see if there's anything of interest for me. Me personally, when I take a look at this week, the only thing that's really standing out to me, I do like Vail Resorts, and then looking over here, Bed Bath and Beyond should be fun. Micron, Nike, CarMax, I'm definitely interested in how they're doing after this year and what their forecasts are. So this could be really fun to trade. The next thing that I'm going to look at is going to be the economic calendar. Now, we know that it's very, very busy this week. We're looking from the 25th tonight, futures into the 30th, but getting this calendar started, we're on the 26th. And you can see here, I don't want to go over all of these, but we have Jerome, I believe, on the mic twice this week. I think in total we have 22 Fed speakers out there. I mean, they just can't get enough, all right? So, not that the market doesn't already have enough volatility in it, I think this week is going to be the same thing. Expect some volatility and have fun trading. All right, so this is a good thing. Let's go ahead and take a look at last week's results here on the SPY and QQQ charts. So we'll get to these here in a minute. These are our newer ones, but if we want to come down here, we want to go to last week. So we're going to go ahead and take a look at that, and that is going to be let's see, I want to make sure we save them. Yeah, it's going to be the 18th, 9/18/22. There we go. And then for SPY, let's do the same thing. So it should be 9/18 right here. There we go, 9/18/22. There we go. So these are on 4-hour charts. I want to go over these really quick so everybody can see what the results were, but also so I can just kind of give you my take on it, just in case you're new to learning the neutral strategy that I give every week to our news letter subscribers and to our room here. So the overall concept again is to trade to the upside to the targets and to the downside to the targets. The upside targets are resistance until proven otherwise, especially in a down market. And then the targets to the downside are going to be support until proven otherwise. So you can see here that this did give you an opportunity to go long in the beginning of the week. It held the neutral. Here we did hit T1. This was a banger of a short from 293, meaning if you reacted off of this, if you were trying to swing this, then you probably got caught on the wrong side. But you know, because we are being mechanical, this gives you two opportunities. You could have went long here, hitting your target one, and then giving you the opportunity to go short here, hitting target one, target two, you could see that bounce, target three, you could see that bounce. And we ended up on this here on the Qs, holding target three. On SPY, same thing, folks. We came up, smacked target one. You could see that. This actually gave a little bit of hope that we could be seeing targets two, but unfortunately, you could see that the neutral ended up not holding by Wednesday. Notice that the lower levels were support until proven otherwise, and the upper levels resistance, and we flushed through target one very quickly. Target two, we flushed that as well, but we did reclaim with the inside and up, but then notice that the cloud was resistance until proven otherwise. And we actually went through all three targets, finding, 370 all the way down into 363. And then we have a plan going forward, and we'll go ahead and go over that as well. Let me change this up. I usually have SPY on the left. Sorry, a little OCD there. We'll go to QQQ here, and let's get our new plan right here. So this is for 925, and I want to go over this with you really quick. These are going to be your new neutral strategy and targets. Again, levels to the upside are resistance, and levels to downside are support. So the execution itself is, if we break above here or if we break down below here. Now, what you'll notice this week is my neutral on SPY is actually below where we closed. So for some reason, if we dip down into the box tomorrow, I'll be looking to go long if we break back over, and then obviously trimming and bringing those stops up and seeing if we can get the rest of the targets. Notice on here, I went ahead and annotated a 4-hour supply for you. And you can see that. You can see the inside and up formation. Don't forget to check out that video on YouTube as well if you don't know how to identify that. And down here, you can see 357, 354, 350. Now, if you look at current price, 367, and my lowest target is 350. You can see that the ATR has been around $20. So this doesn't quite fall in that range. I mean, we could drop even further like we did last week. I kind of feel like with the double bottom, and we'll go over that here in a few minutes, that we could get a relief rally going into this week. I guess it just kind of depends on if those levels are going to hold tonight, as we open up into the futures here in about, let's see, 1 hour and 40 minutes. Man, the day is flying by fast. But anyways, these are levels for the SPY on the left-hand side, and over here on the right-hand side, we got the QQQ. Same thing, we got supply zone up here. We're underneath the cloud. These clouds are resistance until proven otherwise. So therefore, if we do get the breakdown below, we'll probably get nice flushes into these targets. Just beware as we move into the upper targets. The cycle change for, 2 to 3 days to the upside would have to come, and I wouldn't really feel too bullish unless we start closing over the 4-hour cloud. Okay, that just means I believe if we start to close over the 4H cloud, then we could see a new cycle to the upside. Okay, and so it's been a little while. You can see this cloud has been resistant, and the last time that we actually broke above was over here around 9/8/22. Okay, so it's been a little bit. Let's go ahead and go into, we're going to minimize that, and I want to take you over here to the bigger picture. So I'm going to go into SPY. All right, we're going to pull up a monthly chart. All right, and let's go ahead and hit auto so you can see. I'm going to give you a quick few notes here. Again, SPY back to the relief bounce zone, double bottom question mark, levels below 350 and a half, 338. Don't remember, I have levels, don't forget, I already have levels to the downside for you on that neutral strategy, but these are kind of bigger picture on the monthly. And if you notice, we're getting very close to that double bottom. Again, we could see a really nice bounce here, but one thing I want to note is that on the monthly, this cloud has worked for so long, folks. I mean, sure, we flushed it back here in 2020. That was the last time we did that. And once we found buyers in a demand zone, we saw a really, really big rally. And I'm going to talk about the skew and some other things I'm seeing that could be pointing towards that way. And, I'm kind of putting myself out here because the majority of participants out there are super bearish. Everything we're reading is negative. The world is definitely feels like it's coming to an end. If you're, listening to certain people, if you know me, I do not watch news. And I just don't always know exactly what people are talking about. I try to stay away from the negativity, and let's just try to focus on the technicals and what they're telling us, okay? Technicals on a monthly are saying, be careful. This is the first time, right? Well, I mean, we flushed here several months ago, but I mean, if we start closing under here, folks, this looks a lot like March 2020. But again, we're at extreme lower levels where we could see that snapback rally. Okay, the inside and down above makes me feel like 377 is the high for the year. Now I want to talk about that for a second. This is a monthly. This is an age pattern. We have this really big topping wick in here. All right, and that topping wick tells me that there's a lot of selling pressure. Okay, And if I do that, it kind of cleans it up a little bit. You could see that topping wick inside there. And that usually tells us that the high is probably in, or it's not going to be very easy to get back over that. So at 377 is kind of, the top. Then, where are we right now? Current price 367. That's only like, that's $9 away from where we are right now. I'm not saying we can't break back over that. It obviously can happen, but right now that is a supply zone, and this current monthly candle is down, so it's an inside and down formation. We're looking for inside and out formations, and inside this green box, we could find a little bit of love. So if the double bottom does not hold, these are the levels that I came up with that I shared at 350 and 338. Okay. All right. So that is SPY. Now let's look at QQQ. And believe me, folks, if for some reason we get a capitulation event or something goes wrong, I need you to be looking at the monthly and the quarterly charts. That's where we're going to find, good areas to start nibbling. Okay, so here on the QQQ, the 618 is held. This is my line in the sand for this week. All right, that 268.62, that worked like a charm. We had the formation here. This was a great time to buy back in the day. This was a fun rally. It hasn't been very fun since the pullback. And again, the golden Fibonacci tells me at 268. Let's just call it 268 and a half. If we start breaking down below there, you can see 260. Don't forget about your neutral numbers to the downside, but a long-term hedge, I would be looking all the way down here at 235 by 207. That's right. That's what I said. 235 by 207. But again, this would be a very long-term hedge. There's some probabilities behind this that I teach my members once we break the 618 of how fast we could see the 88.7 and so forth. Okay. These are possible. And if you look at it, it is lined up with the origin of this move. And we definitely have some demand in that area. Again, key number going into this week is going to be 260 for me, far as support goes. But if we break 268, this could be a nice little short down into that area. If you're worried and you're thinking, hey, I think the market really is going to continue diving, my opinion is that we could see down towards these numbers. Again, this is a if this then that. If this week we rally for some reason, we start breaking over those 4-hour clouds and those daily clouds that I'm showing you, then things change, right? We're okay with that. So just don't marry the idea, and be very flexible like Gumby going into this week and the next weeks to come. Okay. So anyways, that's QQQ. Again, we have quite a few supply levels above us, unfortunately. And that just tells me that we could continue to the downside. And once again, underneath that monthly cloud, and look at this, folks, we haven't been under this thing in ages. Matter of fact, we kind of came down on the Qs and just tapped it, and then right back up. We flushed it last time. Here we are. Still, how many more days we have in the month? It looks like we have just these 5. So I'm really curious to see how this thing closes. If it closes down, and this goes for SPY and everything else as well, if it looks like something like this, that just tells me we have further room from a monthly standpoint to create range. Okay, and let's just say that range does come into about right here, and we get there, then that creates a really nice trading range into the end of the year, believe it or not. I know a lot of you probably don't want to see that, especially if you have like long-term positions. But the quicker we were to do something like this, the better that I feel about the end of the year for a big relief bounce. It may not get us up to those highs, right, that everybody wants to see again, but it could be a very fun tradable range that could create some nice pocket change going into the end of the year. Okay, so again, QQQ, and that leads me into the next category, and that's looking at the dollar. Okay, so let's come over to the dollar now. For me on Friday, I got into a position where I'm basically shorting the dollar by using, give me one second here, and I could tell you. I'm using UDN. So I bought shares in that, and basically what I'm looking for is the dollar to pull back. Now, I could be getting in the way of a big moving missile here, but I feel like the missile's kind of running out of gas. We're really overextended. We have the inside and up here on the monthly. I would expect, and I need to see it on a smaller time frame, some topping wicks that give me the overall impression that we could be coming back. I'm not seeing that currently, so if I go into a 4 hour, it kind of looks like this. But on the monthly, you could extend all the way up here towards 116, 117. And believe it or not, when we're looking at the overall move of this, you can see that we have supply all the way up here towards 118. So I might be a little early here. If I were to use fibs and just use this entire, not right there. Sorry, give me 1 second. I wanna move this for you for a second. If I just use this pivot and I come down here, then you can see we're over this area and looking for the 88.7 up towards that 117 area. So if anything, I might add to that position if we get up there. This is what the overall chart looks like. So I'm only playing off of this range. If I were to come over here with the Fibonacci's and come up to the pivot high into the pivot low, then you can see the 50 is also around the 117. So there's a lot of confluence on the dollar at the 50 of the overall range, 88.7 of this range, and it's just got 117 kind of written all over it. If for some reason though it doesn't make it there and it pulls back, then that's good for me. But if we get up towards the 117 range, I'll probably add some more shares there. Okay. So that is the dollar. And then the next thing I'm looking at is TNX, the Treasury. And we call this thing. It's just, unfortunately, I like to see it settle down. But it did hit our first target so far, and my next one is 3.99. So what happens, again, just like the neutral strategy, these are resistance until proven otherwise. And if you follow your eyes on the crosshairs, this is the supply zone, but this supply zone was hit already. So as long as it's holding above the 3.66 area, it can continue its way into 3.99. It's extended. I would expect it to pull back. I would expect the dollar to pull back as well. It's just the question is, the timing is the variable. Is it this week? Is it next week? We know that things cannot continue to be parabolic like this for too long before they kind of rest and pull back. Okay. So it's getting there. It's getting close. This is still the blueprint though. The support is, down here towards 3.177 and 2.846. Okay. Let's go ahead and move on. I actually added gold this week. And the reason why, okay, is it's getting closer to my target. I went over this at Simpler Trading on Friday, I think it was, or maybe it was Thursday, and talked about gold and how I wouldn't be long, that I would be actually waiting, doing several different things. Don't call credit spreads, going short. You could do put debit spreads, but I'm looking to see if gold can actually make it down to the 150 range. I currently am not taking a position in this, but this is definitely something I'm watching because so many people want to buy gold. I make the joke, I'd rather wear gold than actually trade it. I don't think it's fun to trade, but I also don't think it's ready. So it could be fun to trade. It just hasn't been ready, and everyone keeps trying to buy this when the quarterly was telling us a long time ago not to go long because of the top and wick. So again, this is also 150 lined up with the quarterly. You can see the next EMAs right there. Definitely, if you look at it from this standpoint, right down into demand could be a nice cup and handle right there. We'll see what happens. Okay. So again, mark that on your calendars. I'm looking for 151 to 150 and then a possible go for the long side there. Okay. The next thing that I want to look at, what I was talking about earlier, getting into, is looking at the skew. The skew is really, really interesting. I've always watched it for the last, 5, 6, 7 years. I love it. I have never given up on it. I think it tells you a whole lot about current conditions. And, with the data that I have, if you just kind of come back here and look, if I were to get and put a SPY chart behind this, what you'll find is right around this red level, these are very extreme, folks. And the probability of us having a huge rally from here are very, very high. Again, you would see that if you put your SPY chart behind there. If you want, you could check these dates in the market and kind of get an idea what happened. Timing is the variable. So the way that we want to trade off of the skew is not say, hey, okay, just because I hit this level, I'm going long. Everything that I'm showing you has to make sense, right? We got to be at a demand zone. Fear and greed is probably at extreme fear. We already know that. Most participants are on the put side. We can gather that, and usually that's when they pull the rug on shorts and get that really big relief rally. So we are very close. As a matter of fact, the levels that we're at right now, folks, we haven't seen since 2020 right here, and then before that, 2016, 2000, all this area right in here, 2016 into the election of Trump. And the market's ripped since then. So if for some reason we get down to this area and we continue to move that gauge on the fear and greed all the way towards zero, then guess what? I think it's kind of like, if you're watching all your other internal indicators, you got to take a stab at it, at least for a nice relief rally. So do we have room to the downside? Yes. Okay. Do we have room to the downside? Of course we do, folks. But at some point, just like when you're using EMAs and price and divergence, something's going to come out of that, all right, like a relief rally. And whether you're bullish or bearish and you just want to buy puts on the pop, the timing is the variable, right? So I don't want to be buying puts when the market is moving down unless it's a capitulation event. And believe me, if you were through trading through 2020, you know exactly what that feels like. And I don't feel it yet. It's an orderly sell-off. It's unfortunate, but it continues to happen, and it's happening at a lot of key areas. So if we come over to ES futures or even SPY, and you just were to watch, the clouds, and just know that, hey, every time we pop up into a cloud, it's a selling opportunity for further down the road. Okay, so that's what it is. So I just want to make you aware. It doesn't matter if you're a bear or a bull. We just want to trade price. Just know that we're coming into an area where we can see support. We could still see that rally. The rallies haven't been big this year. So you got to take it from 1 week to a daily to a 4H candle. And then we kind of, get a better blueprint of what to expect this week. Okay. Overall sentiment for me, very neutral going into this week. There's going to be some volatility. We have Fed speaking, and you need to be prepared. For me, it's probably a little bit tighter focus this week, not try to be all over the place. I am day trading quite a bit, and I'm sure you noticed that through the alerts, meaning I'm trading a lot of equity. All right, I'm trading a lot of equity using the PMZ trade. I took a couple trades on Friday where we made, on Nike, and there's nothing to brag about. But I just want to show you proof of concept. We had, I think if I come over here to alerts, this one was pretty cool. I did an OCO trade that I teach you guys how to do that. And that was, what was that? We made... Let's see here. 77% on Nike. We also trimmed it at 22% and 33%. We had some trades go, especially equity. We did really well there on many trades. Let's see here. I know we had some other good trades and some didn't work out. Some of these trades did not work out, folks. And the biggest thing going into this week was trading smaller, using wider stops. And that doesn't mean that you can't let a trade go to zero. So it's okay to let trades go to zero. Again, if you are using okay, say I typically take a 5,000. Actually, let's go to a whiteboard. We got to do this really quick so everybody understands going forward. Actually, you know what I'm going to do? I'm going to stop this here. I'm going to make a video that I push out there so I can educate people tonight, and it's going to be about this, okay? So we're going to end our broad market analysis there, and I appreciate everybody. We'll see you in the morning. Make sure you're on the mic 30 minutes before we get open. I want you there. I want the support. We need to rally as a team. You guys be ready. Use that community journal. I love what I'm seeing. Folks, we got people with 600% gains since they've joined Trendy in the last 2 months in this crazy market. So it's not that it's not doable, We just have to always tighten up and remember why we're here. And if you need that support, I'm here. Your friends and your teammates that are there at Trendy Trading are there. We're here to help each other out. I can't wait to see you in the morning. Bye bye.